Hi, in this video, we will solve example sums in accounting for calls in advance. Both journal entries and preparation of balance sheet will be discussed. Let's go on to the first example sum. Example sum 1. Star Limited was registered with a capital of rupees 5 lakh in shares of rupees 10 each and issued 20,000 such shares at a premium of rupees 2 per share, payable as follows: rupees 2 on application, rupees 5 on allotment including premium, and rupees 2 on first call 3 months later. All the money payable on application and allotment was duly received, but when the first call was made, one shareholder paid the entire balance on his holding of 300 shares, and another shareholder holding 1,000 shares failed to pay the first call money. The company has not demanded the second and the final call. We are asked to pass the journal entries to record the above transactions and also show how they will appear in the company's balance sheet. So we'll pass the journal entries first and then go on to depict the transactions in the company's balance sheet. So before we go further, let's make a few notes. We have authorized capital, $50,000 shares of rupees 10 each. The issued capital is 20,000 shares of rupees 10 each. The issue price is rupees 12. We'll write the breakup down here. Application, rupees 2 per share. Allotment, it's rupees 5 including premium, so it's 3 plus 2. And first call is rupees 2. As per the question, the company has not yet demanded the second and the final call. So it's 7 plus 2 called up. So first call, the calls in arrears is equal to, it says a shareholder holding 1,000 shares failed to pay the first call money. So the amount of calls in arrears is 1,000 shares multiplied by 2 rupees per share is the first call money. So calls in arrears is rupees 2,000, and the calls in advance that is the amount pertaining to the second and final call, which is received along with the first call. That's on 300 shares, and the amount of the final call as per the balancing figure, issue price should be 10 plus 2. So the final call should be rupees 3, which has not been called up. So calls in advance is 300 shares multiplied by 3 rupees per share, which is rupees 900. So let's go ahead with preparing the journal entries. Solution. In the books of Star Limited. Journal. Date / serial number. We have the particulars column. LF number. Debit rupees. And credit rupees. The first journal entry is for the receipt of application money. Bank account debit to share application account for the application money received. Amount received on 20,000 shares at rupees 2 per share comes up to 40,000 rupees. The second journal entry at the time of allotment of shares, share application account debit to share capital account for application money transferred to share capital account. Amount is the amount of the first journal entry, 40,000 rupees. The third entry is to make the share allotment money due along with the premium. Share allotment account debit to share capital account to securities premium reserve account for allotment money including premium due. The amount against share capital, 20,000 shares multiplied by the allotment money towards share capital, which is rupees 3, 60,000 rupees, and the amount against security premium reserve is 20,000 shares multiplied by rupees 2 per share comes up to 40,000 rupees, and the amount against share allotment is 20,000 shares multiplied by 5 rupees per share, total 1 lakh rupees. The next entry is to receive the allotment money. The full amount has been received. Bank account debit to share allotment account for allotment money received. Amount received 1 lakh rupees. The fifth entry, we'll make the share first call money due. Share first call account debit to share capital account for the first call money due. amount due, it's 20,000 shares multiplied by rupees 2 per share. 40,000 rupees is the share first call money which is due. The sixth entry, we need to pass a combined entry for receipt of calls in advance of 900 and also open a calls in arrears account showing that we did not receive 2,000 rupees. So the combined entry will be as follows: bank account debit, calls in arrears account debit, to share first call account, and 2 calls in advance account. So let's fill up the items. The calls in arrears, as we've already calculated, is 2,000 rupees. The amount of the share first call which was due was 40,000 rupees. Amount of calls in advance calculated by us, 900 rupees. And the amount received at the time of the first call is the amount due, which is 40,000 rupees, minus 2,000 rupees, the calls in arrears which we did not receive, and plus 900 rupees for the calls in advance, the amount pertaining to the final call received at the time of the first call itself. So the final amount, 38,900 rupees. This is for first call money received on 19,000 shares and calls in advance pertaining to final call received on 300 shares. The company has not yet made the final call money of rupees 3 per share due. So we'll stop the journal entries with the sixth journal entry. I will remove the split. We can view all the entries together. So those are the notes at the top, followed by the journal entries. This is the first screen. And this is the second screen. Next, we'll go ahead with preparation of balance sheet. Solution. We leave space for the balance sheet and go on to prepare the note to accounts. Note to accounts. We have particulars and a rupee column. The first note is for share capital. Let's begin with authorized capital. It is 50,000 shares of rupees 10 each, which is rupees 5 lakh, with a double underline. Let's go on to issued capital. $20,000 shares of rupees 10 each, 2 lakh rupees, again a double underline. We'll move on to subscribed capital. Now the company has not yet made the final call of rupees 3. So all the 20,000 shares will have to be classified as subscribed but not fully paid up. Subscribed but not fully paid up. It's 20,000 shares of rupees 10 each, 7 rupees called up. The amount 1,40,000 rupees less calls and arrears, amount of calls and arrears already calculated on 1,000 shares at rupees 2 per share, 2,000 rupees. In the outer column we have 1,38,000 rupees, and the amount to be shown against share capital in the balance sheet of the company is also 1,38,000. Let's go on to note 2, reserves and surplus. We have securities premium reserve. The amount of premium on 20,000 shares we received rupees 2 per share. So the amount is 40,000, and this is the amount which has to be shown against reserves and surplus in the balance sheet. Let's go on to third note, other current liabilities. As discussed in the theory section, the amount of calls in advance needs to be shown under other current liabilities. The amount is 900 rupees. And the final note, cash and cash equivalents. We have cash at bank. The total amount received is the amount of the share capital, 1,38,000, plus the amount of the securities premium reserve, 40,000, plus the amount of the calls in advance, 900 rupees. 1,78,900 rupees. So we've completed the notes to accounts. We'll fill up the items in the balance sheet. Balance sheet of Star Limited as at 31st March dash. We have particulars. note number, and a rupee column. Let's begin with Roman number 1, equity and liabilities. 1. Shareholders' funds. Under that we have A, share capital. Against note 1, the amount of share capital to be shown in the balance sheet, 1,38,000 rupees. Under B, we have reserves and surplus. The amount of securities premium reserve shown against reserves and surplus as per note 2 is 40,000 rupees. The second, current liabilities. Under that, A is other current liabilities. Against note 3, we will write the amount of calls in advance, which is 900 rupees, and the total of the equity and liability part of the balance sheet, 1,78,900 rupees. We'll move on to the second part of the balance sheet, Roman number 2, assets. We have 1, current assets. Under that we have A as cash and cash equivalents. Against note 4, the amount of cash and cash equivalents is 1,78,900, and the total of the asset side of the balance sheet is also 1,78,900 rupees. So we've completed the balance sheet. I will remove the split and we can view the balance sheet together. This is the balance sheet, the first half of the screen. Followed by the notes to accounts. This is the first part. And this is the second part. We'll move on to the second example sum. Example sum 2. Bharat Limited made the first call of rupees 2 per share on its 1 lakh equity shares on 1st March 2006. Binoy, a shareholder holding 1000 shares, failed to pay the first call money. Ashok, a shareholder holding 800 shares, paid the second and final call amount along with the first call money. The second and final call amount was rupees 3 per share. Pass the necessary journal entries for recording the above using the calls in advance account and the calls in arrears account. So let's go ahead with the solution. In the books of Bharat Limited, journal, we have date / serial number, particulars, LF number, debit rupees, and credit rupees. The first call was made on 1st March 2006. Equity share first call account debit to equity share capital account. Equity share first call money due. Amount due is 1 lakh shares multiplied by rupees 2 per share comes up to 2 lakh rupees. Next entry, bank account debit, calls in arrears account debit, to equity share first call account to calls in advance account. The amount of calls in arrears on 1000 shares, we haven't received the first call of rupees 2 per share, which is 2000 rupees. The amount due against share first call 2 lakh rupees. The amount of the final call received along with the first call, the calls in advance on 800 shares at the rate of rupees 3 per share. It's 2400 rupees. And the amount received by Bharat Limited, the amount of first call due, which is rupees 2 lakh, minus the calls in arrears 2000 rupees plus the calls in advance 2400 rupees, comes up to rupees 2 lakh 400 rupees. Equity share first call received on 99,000 equity shares and final call money of rupees 3 per share on 800 shares received. So this is the answer to the second example sum.